Hey, welcome back. It's Wednesday, February 4th, and I decided to give yet another short message as to what is actually happening out there in the market, and that the viewing audience may be, understandably clueless as to what may be going on, what's causing this massive bloodbath that we are seeing. Now, what is causing this? For me, if you just cut through the noise, it really boils down to three things that I want to leave you today. And it's to do with excess leverage. So it's clearly a fact that the professional traders are part of the cause of this dilemma that we're in, simply because they're into the habit of leveraging. So they're borrowing what they need in order to speculate in terms of buying equities, crypto assets. But when the price movements of those assets that they invested goes in the opposite direction to what they were expecting, well, clearly they will find themselves in a position where they're going to be liquidated. So it's a wipeout. So what we are seeing as a consequence is deleveraging, those crypto stocks liquidations, right? That's ultimately what is happening. So that's part of the three. The second is rather new in that there is clearly a dip in market confidence over the traditional safe haven assets, precious metals, fundamentally gold and silver. Now, they currently have dropped from its all-time high of $5,500 in a matter of hours. And the same can be said about silver, which has never happened in my living memory, at least. So this actually raised an interesting question about their role as traditional safe haven assets. Well, clearly, if they are susceptible to the volatility and to the broader macro stresses out there, well, why do we need to place our savings in times of stress such as these into gold and silver? So that's the second. And the third one, and for me perhaps is the most important out of the three, is the global liquidity. Now, we have seen the global liquidity, which is governed by the global M2 money supply, is actually at its all-time low, right? It's around $98 trillion. That is its lowest it's ever been for quite some time. So if you take all of those three aspects that I've explained to you, the excess leverage and wipeouts on the professional traders, the drifting narrative of the role of the traditional safe haven assets, gold and silver, there is clearly a dip in market confidence over those assets. And thirdly, the constraint on the global liquidity. And when that happens, that just simply sucks out the life of everything else that is dependent on liquidity, right? In order to make an economy function, even things like how we drive our day-to-day expenses, right? Just ordinary man and woman in the streets, let alone institutions, right? We all need liquidity. So without liquidity, it's like there's no air. And as we all know, we can't breathe without air. There isn't any life on Earth. And that's the stage, unfortunately, where we're at the moment. We're in a heavily constrained macro stress environment where there's a lot of euphoria and everyone is just simply into classical panic selling, where everyone is selling off what they can in order to extract the very little liquidity that they can get out from their assets. So really, we just need to take a step back, please, and just remain cool, calm and collected, and do not sell your assets, particularly in times of stress, macro stress. So please don't do the wrong thing that you will later regret. Now, in this Friday Desk Review, I have provided deep dive personal thoughts on this topic of macro stress, which I encourage you to watch. And also there is an interesting use case on RWA, so what you're seeing, regardless of the euphoria and the bloodbath, because there's always hope and light at the end of the tunnel. So do not despair and just remain headstrong. Do not panic sell. And if you happen to have spare cash floating around, well, this is clearly a golden buying opportunity to add those positions and with that long time horizon. So that's enough from me today.